Hello smart money traders. So in this video I'm going to be showing you how to avoid fake outs in the market. Okay, and this will actually help to save a lot about your equity. Okay, so now starting from um the higher time frame. Okay, of course you always want to first establish your trend. You want to know where the market is going to before you actually place a trade. All right, so the first thing to do is to identify from your daily time frame, okay, if the market is going to buy or to sell in the short term or in the long term. So now coming from what we have here now on the daily time frame right here, okay, you can see that the market is actually making higher highs and higher lows. Okay, higher low, a higher high, and then the market pulled to this zone right here, and then to this zone right here, and then you can see that the market had a break here. The market had a break here, and we can see all this push to the upside. So of course the market is bullish and we should be looking for buying opportunities, right? So now this is what we had from the previous week. Okay, before last week's trading session, all right, we actually marked out this zone and we wanted price to actually come and make a bounce off this zone and then push to the upside. So we actually had a bullish bias for last week. So and we wanted to actually keep buying the markets and keep buying the markets after aligning, after finding alignment among the from the fundamental to the monthly time frame to the weekly time frame to the daily time frame, okay, and then to the 4 hour and to the 1 hour, they are all saying we should buy, buy, buy. So what happened last week was this. All right, going down to the 4 hour, okay, we can see that the market actually also had a push to the upside on the 4 hour. All right, so of course always the first thing you want to do is to mark out your market structure to ensure that yes, price is actually conforming to your buyers. All right, and we had this all this bullish move to the upside right here. So when price actually pulled all the way, give us this market price action. All right, our high then was around this point here. Okay, this point right here. So we wanted the market to actually come into this point right here, break this level and then push to the upside. Okay, and then we take our buys to the upside. That's what we actually expected from the market. All right, but the market will not have it like that. What we now had in the coming week was this. We now saw that the market on the 1 hour time frame, okay, did all the whole of this. Okay, so now we can see that the market gave us this sweep of liquidity right here. So when the market came here from last week, okay, so now we're not actually expecting the market to give us a break to the upside here. All right, and then we'll now place our buy because like I said, the monthly time frame, the weekly time frame, the daily time frame, and the 4 hour were all pointing to the upside, so giving us that vibe that yes, the market wants to go to the upside. So all what we needed to do was to keep buying the market. So even the 1 hour time frame, okay, was giving us all this break to the upside, giving us all this break to the upside. Okay, so our buyers remain fixed that we are going to buy the market. So when we got to this high, okay, we actually expected the market to take out this high. All right, now before this was the news that came out that caused this market volatility last week. Okay, so before the news, okay, we actually positioned ourselves for a buy, but we had not entered the trade because we were actually waiting for confirmation. So now you have to consider two time frames. Okay, to avoid fake outs in the market, you have to consider two time frames. One, your structure time frame, and then two, you have to consider your entry time frame. Okay, now on our structure time frame, which is the 1 hour, and our 5 minutes, which is the confirmation and entry time frame, okay, we have two different things playing out. All right, so on the 1 hour, we saw that price actually made a push to this upside here. Okay, and then before the close of the 1 hour candle right here, okay, price was still over this point right here, so we actually positioned for a buy. Okay, what will probably happen to many traders is that they are going to jump into the market at this point, right? So once they see that the market has moved up and gone above this place without waiting for the candle to close. So the first thing you want to do is that on your structure time frame, okay, number one, all right, number one, you have to wait for the market to close. Number one, wait for price to close above the high. Okay, you wait for market to close above the high, and this will be on your structure time frame. Okay, then number two, the next thing you want to do is to now go down to your entry time frame. Go down to your entry time frame and now wait for a shift to the upside. Okay, so you must have these two things in check, all right, before you actually place a trade. All right, so now what happened was that after price hovered around this place while the 1 hour candle was still building up, all right, many traders actually jumped into the market and they had their fingers burnt. Okay, but for smart money traders, what you want to do is to lay back or like wait and see what price is doing before you actually jump into the market. All right, so now going down to the 15 minutes time frame. Let's go to the 15 minutes time frame. Okay, let me take out all this. All right, so now we can see that on this is that target line, that high that we're talking about from the structure time frame. So now if you had just gone down to your 15 minutes time frame, let's say that 15 minutes time frame is your lower time frame, all right, okay, ours here is 5 minutes, and then you now see price actually doing the whole of this. You can see that price actually broke and actually stayed above the line on the 15 minutes time frames. So now if you're actually looking at only one time frame, okay, that's why I say you have to consider two time frames. You have to look at the structure time frame and then your entry time frame. All right, so let me say I want to take you down to the 5 minutes. All right, you see what price is actually doing here. Okay, now this is that line here, that liquidity zone right here. Okay, and then the market had made a push to the upside. Okay, so now many people actually jump into the market and got their fingers burnt here. All right, how do you avoid this? Like I said, you must wait for price to close on your structure time frame. Now price now did all this. Okay, many people jump into the market, they kept buying only for price to give us this massive push, all right, to the downside before now giving us all this drama to this side here. Then the third thing actually, okay, which is not actually directly related to the price chart, okay, is that you must check out for your fundamentals, especially if you're a day trader. Okay, you must check out for the fundamentals, check Forex factory, check a news calendar to make sure that news is not coming out at that time that the market had made a push and made a break to this upside here on the lower time frame. Okay, you wait and check to make sure that yes, price have not actually made a push, or price have not actually, you don't have any news rather coming out at that time. Maybe let me say 1 hour to that time, or 1 hour, just 1 hour to that time at least. Make sure that price, the news is not actually coming out, because when the news come out, the news may make a mess of your entry. Okay, so I'm going to add that to the list. Okay, number one, make sure that your structure time frame closes above the line. All right, then you go down to your lower time frame and then wait for a market structure shift to the upside. All right, and then the other thing you want to consider also, like I said, which is not directly related to the chart, is to ensure that you don't have any news in the horizon coming out anytime soon. These three things will save you from having fake breakouts. All right, and that will save you a lot. That will save you a lot, from the market actually blowing your account. All right, so now what you want to do is this. Okay, let's say that the market had made a push to this side here, and the market you actually had this break on the lower time frame. So what you want to do is that you wait for the market to, if there's no news that will cause any serious volatility, you want to wait for the market to come and clear this low right here, sweep liquidity, all right, and then give you a push to the upside, coming to break this high up here. That's giving you a double confirmation that price want to actually move to the upside. So when you wait for all these things, it will save you from a lot of things, from having your fingers burnt. Okay, a sweep of liquidity, which is not totally necessary, but at least if it's there, it gives you more confidence. All right, and then now you want this high to come and be eliminated. All right, on your entry time frame, then you can now actually come and put your position here, place a buy above the close, and then put your stop loss below this zone right here, and then target a high. Let's say we go to the 1 hour time frame. All right, so we can now come and then adjust our entry. Okay, so guys, there you have it. All right, so these are the little things that you can do to get yourself from being burnt out by a fake breakout. Okay, so number one on the list is to wait for price to close above the high. Okay, wait for price to close above the high. Then on your entry time frame, wait for a market structure shift to the upside. And then let's add the third one. We're going to add the third one right now, which is okay. We'll add the third one, which is okay. Observe the news. Observe the news calendar. Okay, so once you have these three checked, all right, you can probably be sure that at least you have a higher probability that price will go to your direction, and then you will not be stopped out due to a fake breakout. So guys, that's where you have it. That's how you have it. All right, don't forget to click the subscribe button, click the like on this channel, and also click on the notification bell so that anytime a video comes out, you can always get notified on things like this. Okay, so I'm Kenneth Unaji here at Forex Trading. All right, your daily forex inspiration and guide. Stay put, take care for now, stay disciplined, and make sure you always follow your trading plan. All right, and don't forget your SMC traders. Take care and bye for now.